Form 2553 is used to elect what's called S Corporation tax status for your business. And this is one of the most common tax elections small business owners consider once their income starts growing. Let's start with the basics. By default, an LLC is what the IRS calls a pass-through entity. If you're a single-member LLC, you're taxed like a sole proprietor. If you have multiple members, you're typically taxed like a partnership. In both cases, the profits pass through to your personal tax return, and you pay income tax and self-employment tax on those profits. Now here's where Form 2553 comes in. When you file Form 2553, you're telling the IRS, I want my LLC to be taxed as an S corporation instead. Important distinction. This is a tax election only. Your legal structure as an LLC does not change. You're not forming a corporation legally. You're just choosing a different way to be taxed. So why do people do this? The main reason is potential savings on self-employment taxes. When you're taxed as a regular LLC, all your net profit is generally subject to self-employment tax. That's Social Security and Medicare taxes, which can be around 15.3% on a large portion of your income. With an S-Corp election, you split your income into two parts, a reasonable salary and the remaining profit. You pay payroll taxes, the same Social Security and Medicare taxes on the salary portion, but the remaining profit is typically not subject to self-employment tax. That can create meaningful tax savings once your business is making enough profit. And this is important, it's not a free pass. The IRS requires that you pay yourself a reasonable salary based on what someone in your role would earn in the market. If you try to artificially keep your salary very low just to avoid taxes, that can raise red flags. There are also additional responsibilities. Once you elect S-Corp status, you'll need to run payroll, file payroll tax returns, possibly file a separate business tax return, and handle more administrative work. That means more complexity and often higher accounting costs. So when does it make sense? Generally, it starts to make sense when your business is generating more profit than what would be considered a reasonable salary for your role. That's often somewhere in the range where the tax savings outweigh the added administrative costs, but it varies by situation. In simple terms, you file Form 2553 to have your LLC taxed as an S corporation, primarily to reduce self-employment taxes. But it comes with additional rules, responsibilities, and costs. And because this involves tax strategy, it's one of those areas where it's worth getting professional guidance to make sure the numbers actually work in your favor.